time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold. All right, let's get to it. Geodrill first. Geodrill Limited, symbol GEO on the TSX. This was a company recommended in February 2021 at a price of $1.60. Stock's now $3.18, up 102% since our recommendation, and it's implemented over that time a solid dividend. Market cap is 163 million, 2.02% yield. What does Geodrill do? They were established in 1998. They are a mineral exploration service company, two mining companies, primarily gold related in West Africa, Zambia, and Peru. It offers reverse circulation core, air core, deep directional, reverse circulation grade control, water borehole, underground mining, blast hole, and horizontal drilling services. A lot of anything you need in terms of drilling for exploration companies and existing producers. Now, the company its current fleet as at Q3 2022 is 75 rigs. That would be unchanged quarter over quarter, and additional rigs are being manufactured. Geodrill continues to expand globally, having signed its first ever contract in Chile this past quarter, as well as 2 new contracts in Egypt. The company's client mix is made up of senior, intermediate, and junior exploration companies. So what is driving the share price? Number one would be strong financials, which we like. Revenues for Q3 2022 were up 29% to 35.2 million. We saw net income up to 3.6 million or 8 cents per share. That's a 100% increase over the same period last year. Now, it generated a return on capital of 26%, return on equity of 18%, and ended the quarter in a net cash position of about 5.7 million. Second, we would say here is the surge in the price of gold, particularly over the last couple months. From its lows in early November in the range of $1,630 US, gold has risen 17% to $1,907 US. That is a significant rise in less than 3 months and bodes well for capital inflows into the sector in 2023. The more money that is raised in the sector, the more money goes into the ground drilling, and a company like Geodrill can continue to benefit. Now, our take here. While the stock is up over 100% since our recommendation from a valuation basis, Geodrill currently trades at 4.5 times expected 2022 adjusted cash flow, 7.5 times expected earnings for this 2022 year. And now, part of the client's question on Geodrill asked if we could give a quick comparison of what price a company like Geodrill may be acquired at if that were to occur. In terms of acquisition equivalents, there is not an exact comparison, but Major Drilling, a large driller in the sector, the largest, acquired a company called McKay Drilling Limited, a leading specialty drilling contractor based in Perth, Australia, for around 80 million or approximately 75 million Canadian in 2021. This was approximately 4.7 times EBITDA. Now, Geodrill will have more than double the EBITDA of McKay this year likely, so it deserves a higher multiple in most cases, in most scenarios. Geodrill currently trades at about 4 times 2022 expected EBITDA. We would not buy Geodrill on a company or any company essentially based on a takeover target, as this is poor strategy. With Geodrill, what we do know is it is likely to post record year in 2022, and given the gold pricing environment and contracts in hand, the company is positioned for growth once again in 2023. This has driven the share price higher over the past year, and current execution from management is strong. We will fully update clients on the stock over the next week, but it definitely is one of our stars of the week with the share price appreciation that we've seen just this year.
So that's interesting.
I got through that.
You're going to be expanding into...
It's a beautiful eye. Sorry.
There you go. Yeah. You say they're going to be expanding into Chile.
Oh, they're in Chile now. Yeah. Yeah. They'll be going. They've signed their first contract. Yeah. Yeah. Yeah.
Right. Okay.
You might be going to Chile. Are you going to visit them down there?
Yeah. Well, that's my wife's family's from Chile. So I may be.
You've been before, right?
Been several times, probably half a dozen times at least.
Aaron has a gold
so might
company
be going down there.
It's drilling. They're drilling for.
Although most of the mining is done in the north, and I've largely been in the center and the south. But so is how long? So is this going to be part of their growth strategies to expand more in South America? Are they just going to
Geographic
stay in
diversification is a
where they are?
huge part of their growth strategy. Getting,
Mm-hmm.
I mean, they have a great business in like West Africa, but going into Egypt, going into other Latin American countries, also going into Chile. Yeah, it's definitely a part of the strategy. Diversification for most businesses is a good strategy. If you can do it profitably, if they can identify markets where they can get a good profit margin in, have an advantage. They're a well thought of company in the industry, and they can bring existing customers that are drilling in those. I mean, that's part of what brought them to other countries. Like the company, they got a business they're drilling with already in West Africa somewhere, and they say, you're doing a great job here, we're moving into this market, say Egypt for example. Why don't you supply us with a drill there? We'll have a good contract. And they've moved now some significant contracts in outside of West Africa, which is great for diversification, and over time probably gives them a better multiple, because you need diversification if something is to happen in one of your markets. It's high risk if you're just in one market. Mm-hmm. Just the same story for many types of businesses across many sectors, right?